How's it going, guys? This is Forensic Forex with Deontay, and I'm back for another video. This is your daily update on Euro versus US dollar, EU. As we can see today here on Friday, we got that draw that we were expecting last episode. So price finally got down here and took out this swing low liquidity pool. Now, if price were to continue to sell off in short term, I would assume that it's going to target this swing low here. So if you just double check, the low here is the lowest point between these two candles. So this is the swing low, and it's below March's opening price in a discount. Notice all the sell opportunities here, all the great sell opportunities was occurring above March's opening price in a premium. We also see a lot of the inversely correlated pairs, like DXY, for example. DXY was below March's opening price and now is above March's opening price. So let's take a look at that briefly. So if you take a look at the DXY, you're going to see now price is above March's opening price. You'll also see that price came back down into that fair value gap that broke that swing high and created the higher swing low inside of it. So each one of these is a higher swing low. So this is the lowest swing low we had for the month. There goes a higher swing low, and there goes the higher swing low. And where does the higher swing low form? Out of all the spots that it forms right inside this fingerprint here, this busy here. Buy side imbalance, sell side inefficiency. Price trades right down into it and trades right back up. A quick repricing, very quick. While doing that as well, it also breaks a swing high formation right here, and now it's above March's opening price. And then it breaks this swing high formation as well. So if you notice, the price is always comprised of two things. I tell traders this constantly. The market is constantly making liquidity pools and destroying liquidity pools. In this move up here higher, it destroyed the buy side liquidity here, trading back up into this order block and SIBI here. Sell side imbalance, buy side inefficiency, or fair value gap. And then price trades right back down immediately, quick repricing, and takes out this swing low. So it also created a lower swing high, even though it destroyed the current stated lower swing high here. It still has a lower swing high compared to this one here. This is a lower swing high along the lines there. But this was a false break. And we could confidently say that it's a false break because after breaking this swing high formation, it immediately reprices and takes out a swing low. So we knew they were aiming to get traders on the wrong side, and price came short. You saw a lot of people in the chat texting and saying, I think the market switched back, bullish, or I think the market switched back bearish for inversely correlated pairs. That could be the case, but I always try to say, be confident with what you're doing. Take your time. You need more confirmation. Do we get a higher swing low after breaking this swing high? Absolutely not. We don't. We actually continue to sell off and break a swing low. So it goes back to a bearish stance or bearish momentum. I want to see price continue to push lower and get back below March's opening price. So we got about a week left of the month. So start getting some ideas of what pairs you would like to trade next month. Start to use that higher time frame filter, that interest rate filter, macro perspective, seasonality filter. Look for those things because next month we're going to be trading a different pair. I don't like to trade the same thing month after month after month unless it really is called for, but start to look out for certain pairs and certain signs that you see that is going to be volatile going into April. So keep your eyes and ears open for that. If you look at this intraday today, Friday, let's go down to the 15-minute time frame. So there wasn't anything on the London session that really impressed me personally. But during the New York session, there was an opportunity here, and let's take a look at that. You can notice as well, Asian sessions is sold off one direction here. When I normally see that, I would not want to trade the London session. I would opt out and look to trade the New York session. The fact that the Asian session did not consolidate, because all markets started in consolidation, you would prefer that. We didn't get that. So London session continues the same trend. It trends down, just like Asian session. I didn't like that because we didn't really get a clean Judah swing. Notice how price does not move above 2 a.m.'s opening price right here. That's 2 a.m. If that's London open, we didn't get any Judah swing. Prices opens and immediately sells off. Gives nobody the chance to get a premium or ideal sell scenario. Traders were forced to sell in a discount. Do you see why I tell you all the time that there's going to be opportunities in the market where you don't get the chance to sell above the opening price? Price will just continue distributing on you. And if you are looking for the setup and this is the only time period you have to trade because you have kids, you have work, you have a spouse, significant other, etc., you got a business, then you're forced now to most likely look for a sell opportunity. If you came to the conclusion or the analysis that EU is going to go lower and target previous daily lows or swing lows. And that's that swing low right here. This blue line, that's that swing low formation. During the New York session, though, there was an opportunity. You can see our price does move above 7 a.m.'s opening price. It takes out liquidity pools here, the dead zone, London lunch. Notice it's consolidating. You like to see when the market starts in a consolidation before going into the kill zone that you're trading. It's a good sign generally. Not all the time, but it's a very good indication, a natural price indicator telling you that this market might be geared to move during these couple of hours. And if you notice, price takes out what? A swing high here, a swing high here. That's all buy side on the 15-minute time frame. If you go down to the 1-minute time frame, what we'd be looking for? We'd be looking for a fair value gap that runs a swing low. And that swing low is inside the fair value gap. So let's go down to the 1-minute time frame. So that's that swing high there. That's 7 a.m.'s opening price. So we're above the open. So we know we're in a premium, at least for the kill session, right? For the kill zone, we're in a premium. Play it forward. See price comes back down below the open. We're still looking for what? A fair value gap that runs a swing low after breaking that. We have it right there. Right here. Small window of opportunity here. There goes the fair value gap. We'll get rid of the session indicator. Somebody asked me what session indicator do I use. It's right there. You can read it. It says shady kill zones, GMT +8. You have to reaccumulate. You have to recalibrate the kill zone times in the kill zone though. There it is. Swing low inside the fair value gap. So that's the entry technique. You look to go short, right? 15 pips for 15 pips. 1-to-1 scenario. And we're trying to get 10 out of this, right? Let's say we could take partials out of 10. Or let's say we do get all 15. That's even great. Or even more. Cherry on top. But always pay the trader. I tell my community, I tell my people, always, my fellow traders, pay yourself. You spent the time to sit here and analyze the chart and mark up the chart. Pay yourself something. Let's see how far this runs down. 8.4 pips. Right before turning back around. I'm not sure if you get stopped. Let's see. Let's keep playing it. Some drawdown for sure, but you can adhere this drawdown if you are using proper risk management. If you're not using proper risk management, you can't hold trades. You just can't. And I think this is where we are right now in current price. So there we are. So the trade is still feasible. We're in London close right now. It could continue to sell lower, right? It still is probably finding more liquidity pools before sponsoring itself to go short. But we could see how we were on par for a second at least, for a couple minutes at least, we were seeing that feasibility of the entry idea. You're not always going to get it perfect, but you need to stick to the same consistent model over and over and over. Everybody wants to use 10 different models at the same time. I don't understand why people do that. Life itself is difficult. And if you can find one thing to master, why not master it? Everybody wants to be a jack of all trades. Master one thing. That one trading model can change your life. One. Hopefully you found this insightful. Peace.